Good morning, everyone, and welcome to yet another edition of Toggle's Daily Video Insights. My name is Jan. I'm the CEO and co-founder of Toggle, and today I'm going to walk you through a pattern in Bayer Pharmaceuticals. Probably many of you are familiar with one of their main products, which is aspirin. And so what we'll do today is quickly walk through the pattern that Toggle has identified for this large pharma company that might highlight a potentially bottom being formed around these levels. As you can see here, as always, that the scenario that was being analyzed took place on 3 distinct occasions. So this is an important number to look at because it gives you some sense as to how many data points were actually available for Toggle to analyze this. And obviously the higher this number, the better. Most recent one, however, and this is notable, was back in 2003. So the levels we're reaching now in terms of negative momentum indicators are really quite meaningful because we haven't seen this in almost 20 years. You can look at the chart to see what kind of recovery history suggests we could see here for Bayer Pharma. The target level is above 52, 57, and the pattern or the deviation from the pattern would be considered to have invalidated the relationship if it dips below 40.39. The key to keep in mind here again is that because of the small number of episodes, you have to be quite cautious in analyzing this particular pattern, but it is notable, especially when we go down. Excuse me if I can scroll down here for just a little bit. If you look at this next chart, which really shows the entire history of the price series, but also what has been happening with momentum. So here we have the 1-week momentum, the 12-month momentum, and the 6-month momentum. You can see that these are really, really quite stretched, and actually that the levels are so far off that they are only matched by the levels that we saw back then. And of course, in those occasions, you can't see it here unless you squint, but the stock subsequently recovered by as much as 20% across a 2 to 3 month horizon. So as you know, the table that we look at up here shows you what a typical gain was subsequent to this kind of stretched momentum across the different horizons. And again, the relationship is strongest across the 2 to 3 month horizon, but you can see that actually the stock made some nice gains even across some of the shorter horizons post the configuration. Anyway, so much on Bayer today. In other news, what we also discussed in today's daily brief, so I hope you take a look, is the opportunity potentially in the real estate market and whether or not it's worthwhile looking at some of the large office building landlords. Currently, the situation is obviously quite dire for those landlords because the skyscrapers in many cities sit empty, but will that situation always be like that? If you're curious, please take a look at the daily brief today. Thanks for your attention, and again, hopefully we'll see you on Monday.